सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
In February this year, Finance Minister Nirmala Sitharaman announced that the Reserve Bank of India will introduce the CBDC or the Central Bank Digital Currency. Our regular viewers might remember that we had done an episode of what was then called Elanomics with Ela Patnaik on what CBDC is and how or what difference it can make, the whole concept of CBDC. Last Friday, the Reserve Bank finally went ahead and released a concept note on how the CBDC could look like and what are the pros and cons and how it will go about implementing it. So there were a lot of questions between February and now, and many of those questions have been addressed by the RBI concept note. And we will analyze that concept note and tell you more about it in this episode of Macrosutra. I'm YP Rajesh, managing editor at ThePrint, and I have NIPFP's Radhika Pandey, noted economist, and our regular Macrosutra guest. Hi Radhika. So this concept note was quite eagerly waited because, in February, there was a lot of anticipation of this central bank digital currency. At the same time, nobody knew the shape and the contours of this CBDC. So what is your first impression from this concept note?
So RBI has been analyzing the pros and cons of issuing central bank digital currency for quite some time. But this is the first note where at least there is a broad overview of RBI's thinking on certain features of CBDC. Though still there are some questions which are left open-ended, on which more discussion is needed. But at least on some there is clarity on the direction on which the Reserve Bank will be moving. There is more discussion on the various kinds of CBDCs, what could be the possible use cases, and also this question that keeps arising in everyone's mind that India already has a very well-developed digital payments infrastructure. So what is the value add of CBDC? Because each country we have seen whichever country has explored the issuance of CBDCs, they have their own objectives. They have their own priorities for introducing CBDCs. So what is the objective for India? So all those things have been clearly articulated. So in that way, it is a step further towards understanding CBDCs in the Indian context better.
Okay. According to the RBI, what is the key motivation or more than, the key motivations if they have more than one?
Yes, so particularly in India's case, what the Reserve Bank is saying is that one of the key motivation is to reduce the cost of cash management. Because even when we have made so much progress on digital payments and we have NEFT, we have UPI, we have IMPS, still cash reigns, particularly for regular transactions and small value transactions. Cash remains the predominant means of payment. And also if we look at the RBI's balance sheets on this expenditure side, the expenditure on printing of currency notes is almost rupees 5,000 crore. And both the volume and value of currency in circulation has been increasing. So they want to at least, one of the perceived motivations of CBDC is that it would help in reducing the cost of printing cash, printing currency notes, because it will be one-on-one as cash. It is also legal tender. It is just cash in digital form, sovereign guaranteed. So going forward, it will help in reducing the cost of printing as well as storage, distribution, transportation of currency. That is one. And the other benefit that they perceive is fostering financial inclusion. Because even now, for a large section of population, they are still unbanked or underbanked, or they do not have access to financial inclusion. So one of the other motivations of issuing CBDCs is to promote financial inclusion. Though there are several ifs and buts there, one of the key feature that they have to introduce in CBDC would be the offline functionality, because if it is online, if it requires network connection, then it won't be of much use.
Yeah,
So
yeah.
offline functionality. So that is one, and the third is of course, to add another, to promote efficiency in payments system, because we already have, but if there is some disruption in the existing system, we have another. And central banks money provides settlement. The cost of settlement will go down with central banks. So I think these were the three motivations. And the last one, which they are saying, is that it provides, which is debatable, which has caused a lot of storm, especially amongst the crypto community. The note positions CBDC as a safe alternative to cryptos. So whether that is true or not, there is a lot of debate, because people are saying it is actually not a one-on-one comparison, because CBDC will be a means of transaction, whereas crypto is mostly used as an asset to gain return. CBDC is stable. So that is where there is some friction on, or some conflict on, the objectives.
I think that was, the next point I was coming to, the medium of exchange versus asset debate. And I remember from our previous, article which you co-authored with Ela, is that, should we give interest on CBDC? Will you be able to do it? If you do that, then okay, there is value to CBDC. But if it is a medium of exchange which does not earn interest, why will I use it?
Yeah.
So that debate continues. Also, from last time to now, in a matter of 8 months roughly, at that point of time, only 9 or 10 countries were in the process of working with, or designing a CBDC. Now 105 countries have got there, and which means the world is sort of moving towards the direction of a CBDC, while crypto is already so universal. And although in India we have that gray area about regulations. So what does it tell you about the fact that 105 countries are exploring CBDC, and that is 95% of global GDP?
Yes. So while 105 countries are exploring CBDCs, it's not that they are going to introduce CBDCs. Okay. So that is very important point. Most of them are in the development stage. They are just exploring the pros and cons. In fact, countries like Japan, Denmark, they have very clearly said that as of now they don't have the intention of introducing CBDCs, but they are exploring the potential benefits. So when we talk about 105 countries, out of this only around 11 countries have actually launched CBDCs.
Okay.
And out of those, there are 8 are the East Caribbean nations. And then we have Jamaica, Bahamas, and one more country. They have actually launched CBDCs. So most of the countries are either in the development stage, or they are exploring the use cases through pilots. So that is where that also is a big change from the last 7 to 8 months, because there is a lot of interest, and a lot of countries are exploring the use cases. What are the use cases to which CBDCs can be put? At the same time, they are giving this very important qualifying statement that immediately they are not going in for CBDCs, but they are exploring the use cases, and if it will improve the technology or efficiency of the existing system, then they will consider the next steps.
The one distinction or the design feature of CBDC RBI makes in that concept note is wholesale versus retail. This was something we were not very clued into or clear about when the announcement was made. So can you, for the benefit of viewers, explain the wholesale versus retail concept? We are all retail consumers.
Yes. So based on the accessibility, who all will be able to use digital rupee or e-rupee or CBDCs, there is either retail CBDC, which is also called the general use CBDC, and wholesale CBDC. Wholesale CBDC is mostly when it is the use of CBDC is restricted to financial institutions. So they are using amongst themselves for settlement. For interbank transactions, particularly when CBDC is used, it is called wholesale CBDC. Whereas when it is used for, if we use CBDCs for some purchase transactions, then it is retail CBDC. So individuals, non-financial companies, when they start using CBDCs as a means of payment, as a means of transaction, as a store of value, that is retail CBDCs. So that is the difference. And what appears from the concept note is that while the RBI is moving on introducing both wholesale and retail, I think first they will try with the wholesale one, and then they will move to retail, because retail will require a complete overhauling of architecture, technology, whereas with wholesale that can be the first incremental step.
And what is this distinction between a token-based and an account-based CBDC?
On the basis of how payments will be made, account-based and token-based CBDCs are defined. Account-based is just, as the name suggests, here instead of us holding accounts with commercial banks, we will hold accounts directly with the central bank. So CBDCs will be held as our balances with accounts with central banks. So that is account-based CBDC. The demerit of this is that it will pose a lot of burden on the central bank to do KYC, know your client of all the customers, and to, you know, the participation of central bank will be much more in case of account-based CBDCs. Whereas in case of token-based, what will happen is that this digital currency will be issued in the form of digital tokens, which will be stored in an app. It is similar to the, you know, broadly what we understand as the transactions that happen in the crypto space, where also units are stored in app. Here also in token-based CBDC, we will have the same method. Now, what needs to be seen is whether the method of issuance will be direct or indirect. Whether RBI will issue directly or RBI will issue to intermediaries like banks and other financial institutions who will be called, they have used the term token service providers. So they will issue to RBI will issue to token service providers, and then token service providers will issue to us. So it will, the transaction will happen through app, and it will happen through tokens. There will be movement from one entity's app to the other. The token will move, and it will be monitored via the token service providers. So that's the difference between account-based and
I was just wondering, does the RBI have the infrastructure to handle something like this? Because this is a country of, I mean, if you're talking financial inclusion, how many crores of accounts can the RBI handle?
Yeah. That is the question, the entire infrastructure, and if it breaks down, because the volume and the value, the rate of transaction, the downtime has to be managed in a way that otherwise it will not be subject to mass adoption. It will not lead to many people using it, and we will have cash as the primary main source, and because this will require initially a huge fiscal cost. It will require fixed cost to infrastructure. So that needs to be seen. And as of now, the concept note is not very clear on the infrastructure, whether it will be blockchain or distributed ledger technology. On that, they are not clear. They are examining the various options.
We talked about a lot of the pros, Radhika. Then there is one con you talk about, and that is the risk to financial stability. How can it be a risk to financial stability?
Yes. So depending on whether the CBDC is interest bearing or non-interest bearing, there could be risks to banking system and to financial stability. So first, let us understand, if there is interest bearing CBDC, what is the advantage? If a CBDC is bearing interest, it might promote monetary policy transmission. For example, if the RBI raises interest rates or reduces interest rates, that will get transmitted more effectively if CBDCs are offering interest rates. For example, in banks, it takes some time. We have seen that banks have their own costs. So when RBI reduces the policy rate, repo rate, it does not get effectively transmitted to reduce lending rates by banks. But theoretically, if a CBDC is interest-bearing CBDCs, it could improve monetary policy transmission. That is the advantage. But the disadvantage, and particularly that disadvantage is very prominent in a country like India with a prominent banking system, is that if you offer interest-bearing CBDCs, there will be a migration. There could be a migration from bank deposits to interest-bearing CBDCs. So, if there is a movement, then banks will not have adequate deposits to lend. The credit creation function of banks will get impacted due to this problem, and then they will have to do two things: either they will have to offer a higher interest rates on deposits, or they will have to go in for other methods of financing the lending. Or they will have to rely on RBI to give them liquidity facility. So the concern is that it could diminish the role of banking system and could lead to bank runs. So that is in interest-bearing CBDCs, but that could be true also if there is a non-interest-bearing CBDCs. If we have some news that banks' balance sheets are not performing well, there is some even slightest of news about banks not doing well, it could trigger a bank run. And we are seeing such kind of situation, possibilities being envisaged in European countries where CBDC could actually trigger more bank runs. Banks may not be facing such a problem, but because you have another option, there will be a bank run and people will take away their deposits and shift to CBDC.
So there are some risks.
There are some risks, yes.
Risks involved, and I hope, I'm sure, the people who will be handling these are conscious of that and will be providing for some safeguards. Let's take some questions from our viewers. It's a topic which a lot of viewers are interested in, and they have sent us questions. First one is from Ashish. Hello, Ashish. Thanks for your question. What is the need for a digital rupee? While we have already digitalized the rupee itself by UPIs, online transactions, etc., are there any new use cases, or would it just help to improve on the current uses? We sort of talked about it, but you may want to elaborate a little bit.
Yes. So we talked about some uses like reduction in cost of cash management, but one of the other use which the concept note talks about is introducing a programmability feature, where if you have a wholesale CBDC, it can be through smart contracts and some other technological innovation. The rupee movement can be programmed to ensure that it is for a specific purpose. So if CBDCs are linked to, say, government schemes, if they are linked to, say, MSME credit to micro industries or credit to farmers.
Narega payments.
Yes. So Narega payments, all kinds of social sector scheme can be linked to CBDCs through the programmability feature, which the concept note talks about. Again, it will require technological upgradation, but that is one potential use case which has the potential of reducing leakages and further improving the effectiveness of government schemes and be a good use case of CBDCs. The other thing is from the retail point of view, whether it will be accepted or not. One important consideration will be anonymity, because cash is offering anonymity, whereas whatever, even when we make a digital transaction, it will leave some trail. So whether it will be adopted or not will depend on what is the level of anonymity. RBI is talking about giving some anonymity vouchers for small value transactions. So these are the various considerations that will define the adoption of CBDCs both at the wholesale level as well as at the retail level.
Balagopal B asks, how is digital rupee different from e-rupee announced last year? Why is there a need for digital rupee when Same question when we have a vibrant UPI system in a place. I mean, we just answered your second question first, Balagopal, but how is digital rupee different from e-rupee that was announced last year?
E-rupee was more kind of a voucher which was announced last year again as for giving some kind of payments, like for giving payments to farmers or giving payments to for corporates giving some payments to their staff and employees. So that was more again a kind of a social sector scheme, more in the form of a digital voucher. It was not CBDC, which is a legal tender, which is a liability of the central bank, which is cash. So that way there is a difference in e-rupee and CBDCs.
The next one is from Aditya, regular viewer. Hello, Aditya. What would be the challenges for RBI to make digital currency a part of local dealing? Can it be a success story like UPI?
Again, it's a critical point, and it will depend on a number of factors. One factor we spoke about was, the popularity of CBDC will depend on whether it offers anonymity to its users. The second is for, if we are talking about financial inclusion, its adoption will depend on whether it has an offline feature or not, because RBI does talk about what other countries are doing for this, because a lot of countries are working on introducing offline features, and then there are some challenges to this. So it will depend on anonymity, whether offline feature is there, and also whether it adds on to the whether it improves the existing state of payment infrastructure or not.
Sagar Rungta asks, how will RBI provide interoperability and settlements of digital rupee with physical rupee or other foreign currencies?
So with the physical rupee, it will be one-on-one. It is at par, and there will be legal amendments to ensure that there will be a one-on-one transaction between digital rupee and cash. So that is clear. And also, when we talk about token-based or account-based, we will RBI will have to do suitable changes to the legal framework. Now, coming to cross-border transactions, it is an evolving field, and a lot of countries' central banks have jointly initiated projects to improve cross-border transaction, because CBDC does have the potential to reduce the cost of cross-border transaction, but it requires changes in the design of CBDC early on. So if the RBI contemplates that CBDC e-rupee will be used for cross-border transaction, the design features will have to be modified accordingly in the initial stages itself, rather than in the second stage or at the latter stage. So it will require consultations and having joint projects with other countries and introducing suitable amendments early on in the design.
The last question is from Amal S. Biju. Does digital currency work on blockchain? How secure is it? Will all transactions be successful, or just like other things, it works sometimes and does not work sometimes?
So that's the most critical aspect, because on the technology aspect right now, it is in the concept note is just weighing the various options. It is talking about a centralized technology versus a decentralized technology, but it is not clear what will be the technological infrastructure. As of now, what RBI has done is that it has listed down the essential attributes of an ideal technological framework, but they haven't spelled out the next steps. So I think now the next steps will be, because this is a very high level note on certain elements of CBDC. I think now the next step will be to engage with industry participants and engage in consultations with stakeholders to take it to the next step. Right now, they have just explored the various options and laid down their views on some of the design features.
In fact, in that concept note announcement also, they said the RBI will soon commence limited pilot launches of the e-rupee for specific use cases. In fact, they've called it e-rupee for specific use cases. So they're using it interchangeably. So we will look forward to that limited pilot launch, how it goes, what the RBI experience is, what the user experience is.
Yes.
And we are all excited about going another step in the direction of the digital currency. Thank you for watching this episode of Macrosutra. We will be back with another one next week. Until then, stay safe and have a great weekend.